Hi, my name is Samantha Scott, and this is my presentation for Accounting 6320 on Enron, Lessons Learned. Throughout the 1990s, Enron became one of the most well-known and respected companies to work for. Enron was also one of the best companies to invest in. Enron seemed to have it all, until December of 2001, when it all fell apart. There are many lessons that can be learned from the collapse of Enron. One of the main lessons that can be learned is to always strive to be the most ethical and honest business person one can be. Another lesson that can be learned is how to interpret accounting standards. The last lesson that we will discuss will be on how to protect yourself as an investor. As a future business leader or just an investor, there are many lessons that we can learn from the Enron scandal. A little history. Enron was founded by Kenneth Lay. Enron Corporation was an American energy company headquartered in Houston, Texas. Enron was the rising star of the 1990s. It was named by Fortune magazine America's most innovative company for 6 years in a row. Enron seemed to be the perfect company to work for. They treated their employees well with stock options and bonuses. Who wouldn't want to work for them? Enron also seemed like the perfect company to invest in. With a steadily rising stock price, it seemed ideal. It all appeared too good to be true, and it was. In December of 2001, Enron Corp declared bankruptcy. Everyone found out that Enron had been using clever accounting tricks to hide its massive amount of debt. Finally, after they had dug themselves into a hole they could not crawl out of, the world found out about their problems. Being an ethical business person. Since the Enron scandal, corporate ethics has been brought to the forefront when discussing American business. After Enron and several other companies fell apart, many people questioned the honesty and integrity of every major corporation. Why is this important? Striving to be an ethical and honest business person is highly important. There is a fairly easy way to become an ethical business person. When faced with a difficult decision, just ask yourself a few questions. Who are all the people affected by this action? Is the action beneficial to me? Is the action supported by my social group? Is the action supported by national law? Is the action for the greatest good for the greatest number of people affected by it? Are the motives behind this action based on truthfulness and respect and integrity toward each stakeholder? This is called the decision-making framework. If the answers to questions 2 through 6 are all yes, then it's a good idea. If the answers to 2 through 6 are all no, then it's probably not a good idea to do it. Becoming an ethical business leader will be a long and challenging road. Being able to stick with principles and set high standards oftentimes will be hard to achieve, but will definitely be worth it in the end. One thing we learned from Enron is the importance to have a strong set of ethical standards and values. Another thing to remind yourself when the ethical road seems long is that the good times do end eventually. Former Enron board member was quoted, "This was a very young and experienced management team, and I think both management and possibly the board thought the good times could never end." That's one lesson. The good times do end. Next, we question whether the accounting standards are too rule-based. The Enron boys used the accounting standards to their advantage. They interpreted them however they chose. They skated just under the legal line when creating their SPEs. Since they deemed that to be okay, eventually Andy Fastow did create an SPE that was very illegal. By that point, they had such financial problems to cover up, they were doing whatever they could to hide their debt. The United Kingdom has successfully avoided having an Enron. They claim this is because their accounting standards are principle-based versus American standards that are rule-based. Rules, it is argued, allow auditors to focus on form and not on substance, to be compliant with the regulations whilst avoiding its spirit. Had the auditors in Enron paid attention to the spirit underpinning the U.S. rules-based regulation, it is unlikely we would have seen such catastrophic failures. The UK response to US audit failure submits that it is the principled form of UK regulation that keeps our markets intact. Had the U.S. standards been different, maybe Kenneth Lay, Andy Fastow, and Jeffrey Skilling would have made different decisions. Or could it just simply be that these men had no personal moral or ethical standards? Finally, protecting yourself as an investor. Thousands of people had invested their life savings into the Enron stock. As the stock prices soared through the 1990s, people were becoming rich. Their retirement package were growing in exponential amounts. Since the stock price kept rising, no one wanted to cash out because it would just keep getting better. Then in December of 2001, when Enron declared bankruptcy, people were left with nothing. The main lesson the investor learned is to not put all your eggs in one basket. There are many people who only invested in the Enron stock. It was one of the best performing stocks at the time. As an investor, it is extremely important to have a diverse stock portfolio. Now more than ever, you need to maintain constant vigilance in monitoring your portfolio. If one chooses to invest in the stock market, they need to maintain their portfolio. This doesn't mean buy and sell constantly, but never buy and just let it go. After Enron, many people were very wary of investing in the market again. It's a good time to remind investors that personal finance is not about getting rich quick. It's about organizing your money in ways that both protect your loved ones and bring you closer to the kind of life you want to lead, which is exactly what investors in Enron didn't understand. They were riding the high, too afraid to cash out just in case it went higher. The important lesson as an investor that we can learn from Enron, it basically means to have a diverse portfolio, pay attention to the company. If it sounds too good to be true, it probably is. Also invest to take care of yourself and your loved ones, not to get rich. And finally, the Enron scandal was one of many at the time. It was a sham of accounting fraud and number manipulation by a few top executives. It ruined thousands of people's lives, but there are many lessons that we have learned from Enron. The first lesson was on the importance of being an ethical business person. It appeared that Kenneth Lay, Andy Fastow, and Jeffrey Skilling had no ethical boundaries. A good tool to use when faced with an ethical dilemma is to use a decision-making framework where you ask yourself several questions about the decision being made. It will help one guide their decisions and make a choice that is the greatest good for the greatest number of people. The next lesson discussed was the American accounting standards compared to the United Kingdom accounting standards. Perhaps if the U.S. accounting standards were more principle-based versus rule-based, the Enron boys may have made different decisions. Then again, maybe they would have taken the same path. The final lesson was learning how to protect yourself as an investor. This includes having a diverse stock portfolio, monitoring that portfolio, and realizing that investing into the stock market is not about getting rich quick. It is about investing to take care of yourself and your loved ones. Hopefully, since the Enron scandal, business people, employees, and the public have learned many good lessons and strive to be moral and ethical in all aspects of their lives.